This November, there are murmurs in the financial corridors suggesting a change in fortune that might reshape the course of the Wall Street stock that is most talked about. The voice that resonated was Dan Ives. What if he was mistaken? Throughout Silicon Valley's valleys, bullish bets on Tesla, the behemoth of the stock market, have been prominent. Come along with us as we crack the code, examine the statistics, and investigate the electric avenues of investing that may lead to the greatest month ever for Tesla stock. Could this be the beginning of the end for Tesla, or is this simply another bend in the EV road? Tighten, fasten your seatbelts as we negotiate the whirlwind of financial projections, market rumblings, and the mysterious Elon Musk's grand scheme. Let's get started. But before we do, please show your support by leaving a like on this video and subscribing to Tesla Stock News. Despite what detractors claim about the dominance of home and office charging, a sizable majority of electric car service consumers will use the charging stations, with cost per kilowatt-hour being a crucial statistic. Tesla has exceeded forecasts. Wednesday, Dan Ives, a Bush analyst, correctly emphasized Tesla's impressive performance, particularly after the company's second quarter delivery report revealed numbers that exceeded Wall Street's projections. 466,000 deliveries compared to a forecast of 447,000. Production also increased, suggesting improved capacity and a strong macroeconomic environment. Tesla's unique position in the electric vehicle market is attracting attention from rivals like GM and Ford. The company plans to transition from charging to battery management and ultimately fully autonomous driving. This is in line with its monetization strategies, which are effectively refuting negative perceptions. The market's good response to Tesla's partnership with Ford and GM has been noted by well-known Tesla advocate Dan Ives. After the company announced that it would be sharing its supercharger network, its shares reached an 8-month peak, making it evident that Tesla had successfully monetized the deal. Do you know who else shares in prop optimism for Tesla from our colleagues at Seeking Alpha, who provide in-depth coverage of the company's progress and insights into Elon Musk's innovative strategies as well as the stock's performance? Seeking Alpha offers a distinctive viewpoint on Tesla's offerings. Droof in the middle of the regular media buzz for in-depth research and a special offer. Make sure to click the link in our description and take advantage of our Black Friday deal right away. A strategic pricing is included in Tesla's roadmap. Cuts putting expansion ahead of short-term profits is a strategy that has worked quite well, especially in China, although margins are currently being hit, a recovery is anticipated soon. According to IES, which refers to Tesla as a golden EV success story, the company is still leading the electric vehicle market. Expectations are high for Hyundai and Honda to follow suit in the expanding adoption of Tesla's supercharger network. This trend began with Ford and quickly spread to GM, Volvo, Mercedes-Benz, and Nissan. Based on an IES estimate by Wedbush, these partnerships might bring in up to $20 billion in income for Tesla. Tesla is aggressively pursuing a share of the $7.5 billion federal subsidy meant to encourage the construction of some 500,000 high-speed chargers along important U.S. highways. Notwithstanding the substantial investment Tesla has made in its supercharger network, roughly $42,000 per connector, the Biden administration has stated that Tesla's eligibility is contingent upon its network's availability to other automakers. Comparing Tesla's solution to its competitors, who spend anywhere from $100,000 to $250,000 each connector, it is still more affordable. The sentiment going forward is that tech stocks, including Tesla as a disruptive tech entity rather than a mere auto player, could experience a surge in the latter half of the year. Growth is expected to surpass projections, contributing to a burgeoning tech bull market. Tesla's stock has experienced fluctuations, with a 10% increase this week and a 10% decrease over the past month. These movements appear to correlate with the broader tech market's performance, particularly the Nasdaq, with recent agreements granting other OEMs access to its infrastructure starting in. Solar energy reduces the cost of energy generation, increasing the venture's profitability. Despite recent volatility, a significant portion of analysts are currently recommending Tesla's stock as a buy. Ives projects that Tesla could amass total revenues surpassing $330 billion by the decade's end, a stark increase from the $94 billion recently reported in the analyst community. Ives stands out with one of the highest valuations on Tesla, setting a target price of $1,350 per share. This valuation is based on a forward earnings multiple. Despite the obstacle of rising interest rates, Dan Ives has argued that the drop in tech stock values last year was overblown and predicts a strong recovery in the sector, comparing the present cycle to one not seen in 30 years. Ives continues to have a strong outlook on the technology sector, encompassing areas such as software, cybersecurity, and semiconductors. He believes that this is the start of a new tech bull market. Rather than a moment to be alarmed by valuations, the market is upping his price objective for Tesla to reach $350, while Tesla's stock is trading about $1,250 below Ives' target. Ives emphasizes that Tesla, under Elon Musk's leadership, has demonstrated its capacity to monetize its supercharger network and self-driving technologies. Bears continue to exist, especially after earnings reports surface with concerns about margin and ongoing price reductions. However, IES contends that Tesla's development trajectory is only getting started, as seen by the stock's more than 90% annual increase. The negative similar to Cathie Wood from ARK Invest IV, who views Tesla as a tech powerhouse with its full self-driving technology position yet as a leading AI company shortly. This viewpoint pigeonholes Tesla as just an automaker by asserting the company's significant role in the tech and AI space. The supercharging network is just the initial phase of Tesla's services monetization. According to IDS, by 2030, this network may bring in up to $20 billion in income annually, greatly bolstering Tesla's financial expansion. This prediction is predicated on the idea that by the end of the decade, EV adoption will rise from the current 3 to 4% of all vehicles to 20%. The transition from primarily home and workplace charging to a more varied pattern, which includes long-distance EV charging, is taken into account by Ives' model. Analyst Dan Ives of Wedbush Securities characterizes Tesla as the gold standard of EV success, which highlights the company's supremacy in the electric vehicle market. Major automakers including Hyundai, Honda, Acura, and others are joining Ford and General Motors in employing Tesla's charging infrastructure, indicating an expansion in the use of the company's supercharger network. This partnership might bring Tesla up to $20 billion in revenue as part of a larger plan to profit from a U.S. government subsidy intended for the installation of 500,000 high-speed chargers. Even though each connector costs $42,000, the supercharger network investment is significantly more affordable than what competitors would have to pay. The tech industry's most volatile stock, Tesla's, saw a 10% increase this week despite a decrease over the previous month. The stock's movement is in line with trends in the Nasdaq and larger tech sector. The complexities of Tesla's market strategy, such as its competitive positioning and supercharger network expansion, are important to understand the company's future. Fortunately, our partners at Seeking Alpha offer in-depth analysis on these topics. Discover more about these movements with their in-depth coverage, then click the link in the description to take advantage of a unique offer. Product releases, quarterly earnings reports, alterations in environmental policy, and even Elon Musk's social media activity consent. Waves across the market. Additionally, external economic factors, such as interest rate fluctuations, issues with global supply chains, and inflation can have an impact on stock performance and investor confidence. It's crucial to remember that as the world increasingly shifts towards sustainable energy, Tesla's stock fluctuations reflect both recent events and long-term investor perceptions about the company's position in a sector that is poised for a green revolution. Tesla's innovative contribution in the electric car industry. Investors closely examine the company's fundamentals, growth potential, and competitive positioning due to its substantial investments in gigafactories, advancements in battery technology, and the expansion of its supercharger network. Battery technology and renewable energy solutions position it at the forefront of this transformative wave. As demand for electric vehicles rises, Tesla is attempting to accommodate this need by expanding its infrastructure. The intricacy of the stock analysis is increased by the company's involvement in multiple industries, such as AI and automotive energy generation and storage. Every segment has unique opportunities and hazards that have varying effects on the performance of the stock. When we continue to follow Tesla's journey, investors and analysts will find it fascinating to watch as the company's alignment with the Nasdaq's performance is a dance of data, narratives, and expectations where every news bite can turn the market's tide. The attention will continue to be focused on how responsive stocks are to tech trends and market mood. Ives has increased the price of Tesla and projects a new age of growth for tech equities, believing that they would outperform their valuations in the upcoming years. Despite a recent decline in Tesla's stock linked to worries about margins and price cuts, Target is highlighting the company's potential to monetize important items like its supercharger network and self-driving technologies with a 350-point target. Ives continues to maintain a bullish outlook, which has been reinforced by a more than 90% year-to-date increase. He challenges the pessimistic viewpoint that regards Tesla as just an automaker, aligning instead with the belief that Tesla is a significant innovator in technology and artificial intelligence. This position is bolstered by the potential profitability of Tesla's services. Beyond EV sales, in particular, the company's supercharger network is expected to have a major impact on revenue by the end of the decade. By adding 7,500 superchargers to its network by 2024, Tesla hopes to more than double its current capacity, which will boost growth and allow the network to utilize solar-powered energy generation. This means that by the end of the decade, Tesla's revenue could surpass $330 billion, a significant increase from its current trailing 12-month average. He sees the company's broad business as elements that will continue to solidify, including its supercharger network, energy business, autopilot, full self-driving development, and battery ecosystem. Tesla's financial standing. As we look ahead at Tesla's innovative strides and the possibility of finding the next big investment opportunity like this, Ives is steadfast in his belief that Tesla is poised for substantial growth, positioning itself as a key player in the tech and AI space, and as a leader in the EV market transformation aligned with government environmental goals. Tesla's Seeking Alpha proves to be a priceless resource. Their stock screener may be able to identify top stocks with promising future growth. Discover the most recent advancements from Tesla and beyond with Seeking Alpha. Don't miss out on their exclusive Black Friday deal. The link is in our description. With industry analysts like Dan Ives projecting a bullish future and Tesla's alignment with clean energy initiatives, the company appears to be on a steadfast path to further success. What does this mean for the future of EES? Could Tesla maintain its lead in the race toward a zero-emission world? How will their supercharger network expansion impact their market position and revenue streams? Tesla's journey has been a testament to innovation and market foresight. We've seen that their growth is not merely a stroke of luck, but rather the result of strategic planning, technological advancement. Please share your ideas in the space provided below for comments, and don't forget to like and share this. Also subscribe to Tesla Stock News. We appreciate your time, and we'll see you in the upcoming update.